Morning everyone, Paul Duncan here with GammaEdge. It is Monday morning, 3:14, just before the open. Let's go ahead and get started. Little change up in the presentation today. I wanted to start with the 0 Dte structure because I think it paints a fairly interesting picture of what's coming today. These are the wing charts, which for those of you who are members, you'll understand in terms of their interpretation. High level, we're basically accumulating net gamma on both the call side and the put side, and this is for the short-term expiry. When you have the red wings greater than the green wings, you can see you have a net negative expiry occurring for each of the indicated either indexes or ETFs. The key to take away here is that this little dot that occurs in each of these is the closing price from Friday, and you can see there's actually quite a bit of put gamma or negative gamma that is related to the expiry today. So watch for a drop and then watch for a subsequent reversal. That'll could be a setup. There's another YouTube video that I posted earlier this morning that goes into greater detail on this. Because of this, we're going to color this cautionary to possibly a green light for the 0 Dte folks. Something to watch this week. This condition prevails throughout the week. Overall, the market model via our cumulative tick is very weak. Here at Circle 1, we finished the day on Friday completely risk off. Everyone was abandoning the markets ahead of the weekend, ahead of headline risk, etc. Longer term here at Circle 2, these indicate, because they're in a downtrend, that we have been unable, in terms of the cumulative tick, to get above this for any duration of time to pull this up. We are in a declining market. If you go bullish in this market, you're going to be doing so on a very, very short-term basis, and most likely you're going to get chopped around. What we're looking at doing here consistently is actually selling the rips here and being able to take advantage of the downside. The ES actually is comprised of both the excuse me, the March and the June contracts. We're in a transitional period this week, which started on Thursday of last week. You can see when I took the snapshot that we're still bouncing right up against that 4,200 level. The key levels here that you can see have moved around quite a bit over the weekend. They are not painting what I would consider a bullish picture, and you can see the VIX down here is actually back up and elevated at 31. For that reason, red light with a possible yellow light, just because of the previous mentioned 0 Dte, if we do get those reversals and if we do see the VIX come down. Where's the edge? We're not really seeing much of an edge. When we look at the conditions that transpired over the weekend, in terms of the changes in the market structure, there's no measurable edge for 314. Sitting on the sidelines would not be a bad thing here for today. The VIX, the volatility of vol here has dropped and continues to drop, which we consider as bullish. But contrasting, this morning's numbers are showing actually an increase in the VIX again. We have a hard time getting below the 20-day, and until we can close below that, we think that sitting on the sidelines in terms of trying to play vol might be the better approach here. A decreasing volatility of vol, but an increasing VIX are dispergent or divergent type of indicators, and it's really hard to trade those in one direction or another. When we take a look at the PM and the AM levels, the combo levels here, note a very, very high expected move today. This is open, high, low, close, not close to close, which a lot of people confuse, so I want to make sure that's clear. We have a huge support structure down here at 4,000 with a combination of the call open interest and put open interest. It has nothing to do with gamma. It just answers the question where people stack their puts and their calls. So look at the 4,000 level for that. I want to also point out that we have seen a new emergence of the 3,900 level. So puts are being added to the overall complex, and it's enough to cause that gamma to appear on our radars. I also want to point out, although I haven't highlighted in terms of circle, we had a significant drop in POI over the weekend in the PM expiries. The PM symbols here down to 3,400. That is a fairly significant drop, and I would urge you to go back to prior presentations to take a look at that. We actually think of that as bullish, and that has back-tested as bullish, but right now in the declining market, we're not putting a lot of weight in that. From 0 DTE perspective, we are the indicator here, just so you get used to how we do this. Only one tile is shown. It's net negative gamma condition. A little bit higher than we were last week, but not appreciably. I mean, it's 12,000 contracts. It's not a big deal. On the upside, 4,300, very, very doubtful. We'll push into that into the close. On the downside, 4,100 certainly is in play. You can see the 4,150 levels, and as we go down, obviously these levels will grow just because of the way gamma is maximal at the money. I did post a video on the 0 DTE, and the link is here. You should be able to hover over that and be able to use that. Go watch that as you want. When we look at the expiration, we have seen a significant growth in the net negative gamma. This could become fuel after the expiry or into the expiry. We'll have to wait and see, but you can see pretty much a nothing muffin between today's expiry and Wednesday's expiry relative to everything that's coming off with both the AM and the PM on Friday. And finally, when we take a look at the overall condition of the SPX, and this is the combo, so this is both the AM and the PM settled, net negative, fairly significant level. This has grown quite a bit over the weekend. A lot of puts being added, as I said. 4,300 is the last major net negative gamma. You can see all the deltas are all negative except down here where we've got both the call open interest and the put open interest. 4,100 remains a downside target to watch, and then of course we could fall through to 4,000 or even points below. Finally, one final comment. We've got about 36%, 35 indicated here. This little slice is another 1%. We've got about 36% of the SPX expiring this week, and that's a significant amount of capital that has to get redistributed, so watch for volatility this week. Once again, thanks everyone for watching. You can follow us at or join us at GammaEdge.us. That'll take you to a Discord sign-up page. 14-day free trial. Come on in, kick the tires. All the tools will be turned on for you in the trial period. And you can also follow us, of course, at GammaEdges with an S on Twitter. And if you're watching this on YouTube, don't forget to like it if you like the content and want us to continue doing what we're doing. So thanks, everyone. Have a great day.